Hi there, and welcome back to the Money Effect, where I bring you all news, money, and finance related. Disclaimer: this is not financial advice and just strictly for educational purposes, just my opinions. Hit the like and subscribe for the YouTube algo, and now that's out of the way, let's go. So, what's the news this week? What's been going on in the news around the world, the financial markets, and well, obviously, we're going to start on the main issue, politics. And I mean, is politics related to finance? Well, if you didn't believe it was before, clearly it is. We've had a prime minister for, I believe, 44 days. Liz Truss, the shortest ever prime minister in history. Imagine that. That just goes to show the times that we're living in, especially in the United Kingdom, moving like a third world country. And she brought a budget. Her solution to high inflation and cost of living crisis was to give tax cuts to the rich people. I mean, anybody that thought that was ever a good idea, I just don't understand where that came from. But it had massive implications. Obviously, not only for herself in losing her job and having to resign, but also for the market because they did not believe. The market right now is the inflation is out of control. That's what everybody's concerned with, and they want us to get into a position where we can bring inflation down, but it doesn't bring it down to the point where it crashes the economy, and then we can still go in on create growth. But obviously, um, giving more people, rich people, more money is not really going to be the solution in that. And I think everybody would have known that. And that creates a lot of turmoil, pushing up interest rates. She literally messed up the mortgage market in about a week, pushing up all these high interest rates. And I'm pretty sure everybody now, if you've got a mortgage, and then if you've got a mortgage and you're on a fixed term and you've just fixed it before this happened a couple of weeks ago, then you're good for the next two to 5 years or whatever. If you've got if your mortgage is ended and you're on a variable mortgage, I mean, you've got some decisions to make really because at the moment it's calm, but it's like you've opened the wasp nest, so we don't know where this is going. So, I mean, that's the money advice part. I'm sure if you go to Martin Lewis, you get some advice, but yeah, for those on a mortgage, be careful. But in terms of you know what's going on in the markets, that's a big impact now. Now, who's coming in to replace her? It's quite funny that this guy here, Boris Johnson, is planning to stage a political comeback. And I, I mean, Boris and Rishi are the favourites right now. Neither of them have actually, as of right now, formally announced that they're coming back. But it's clearly they are. They're trying to like whip up some support. I mean, I don't know how the markets are going to react to Boris Johnson, and to be honest, I'm not sure how they're going to react to Rishi Sunak. I mean, Jeremy Hunt has literally just reversed everything that Liz Truss has done, and that seems to have calmed the markets. But who knows? The only thing I'd say on a side note is that Rishi Sunak he's been a quite prominent supporter of crypto as a chancellor. I'm sure as if he was to become PM, he'd have bigger issues, but because of so much uncertainty in the UK, especially from the political aspect, it's leading to a lot of companies deciding to invest elsewhere, and a lot of the plan was to make. I'm a strong believer in cryptocurrency as the future, and the plan was to make the UK a crypto hub. Obviously, a lot of companies are now not sure because of the political environment. They have now, there's a big company, I think FTX decided to choose Paris now as one of its European headquarters instead of London, which it was originally planning. So, if we do get Rishi Sunak as Prime Minister and he was to keep Jeremy Hunt, um, to kind of keep those policies, i.e., we're not just going to be giving tax cuts for the rich, we're going to try and get inflation control, but also we're going to try and keep growth moderate. I'm sure that would help the markets and it would help crypto. So definitely, you've got to look out for who's going to become prime minister. Now, obviously, in terms of stocks and like investments, let's look at Barrett. Barrett's they develop homes. Now, obviously, with interest, people have been living on 0% interest rate basically for the last plus 10 years since the financial crisis. So people have never understood essentially what it is to obviously when I say 0%, you're thinking, well, I still pay. Why am I still paying interest then? Obviously, what the Bank of England charges the bank, they've got to make a little Sorry, they've got to make a commission on top. That's where they're going to make it from you. So if they're charging, the Bank of England are charging the bank 0.2, obviously they add on their 1%. That's where they make their profit. Now, if the Bank of England are charging more, you're going to pay more, and that's what's happening now. So obviously, home developers, we've seen what's happening now. Like you look at this company, Barrett has nearly halved in size since the peak. You know, they had a good reprieve this week with a bit more stability in the markets, but I don't expect this to last long. Me personally, I feel like we're in a recession, probably even going into a worse recession. People are going to start seeing mortgage payments. I know on average people that are on variable rates are seeing their mortgages go up by 400-500 a month, and that's just like on average. So if you've got a big property, you bought it at the height, and with all this uncertainty, who really is going to be buying properties? So obviously, home builders suffering a lot. If you're somebody that does believe in the future of the UK and believes that house prices will always go up in the long term, then perhaps you need to start looking at these home builders. Um, but at the moment, I still think these companies have got further to fall, but they're falling a lot. So definitely put them on your radar, because unless you think the UK is never going to be investable again, then you know, good ones to check out. Centrica, obviously, they've enjoyed themselves with the high energy prices, but at the same time now, they got a little reprieve this week because um, Liz Truss was going to do 2 years of energy capture, and Jeremy Hunt's only doing 6 months, but we don't know where that's going to go. But probably the energy story in terms of the profits for energy companies is probably run its course now. I feel like whoever comes in has really got. I think Rishi did do windfall tax before, but obviously it's going to be, you know, probably more. So I mean, energy companies again, British Land Company. Again, look at this, a property development and investment company in the UK. It does REITs. If you're somebody, people talk about property and talk about buying physical property. Everybody wants to be a property investor, but if you're somebody that, maybe you don't have that capital to buy a physical property, getting exposure to a group of properties via a retail investment trust, which is what a REIT is definitely a good way. But as you can see, and these pay good dividends. I think this pays 6% a year dividend. So, if you're putting investing 1,000, you're getting £60 back a year. So that's at least covering your admin. But as you can see, as the UK property market is becoming uninvestable with everything that's going on with the higher interest rates, with the political climate, this is just, look at it now. But if you're somebody that believes in the UK, yes, we're going into a hard recession. Yes, these things are probably going to get lower. But if you're somebody that believes that, maybe when Labour come into power, and then because Labour are going to come in, maybe whoever's the next prime minister, maybe Sunak or Boris Johnson just comes back and decides to like literally become a new man, the UK is not done. And if you somebody that does believe that, and you're somebody that wants to invest in property, then you need to be looking at these kind of things now. Because there's no point looking at them at the peak, which is what everyone does. Peak here, peak here. This is the bottom now, or coming. Probably, like I said, we might go further down. But again, it's a time to start looking, especially if you're somebody that believes that in the next 5 to 10 years, the UK is still going to be investable. And obviously, over the long run, we've all seen property always goes up. There's an infinite supply that can be built in this country. Yeah, so that's always the supply constraints are always going to limit property in the UK. It's just whether the demand can stay the same or go higher. And at the moment, the demand is likely to go lower, and hence prices are probably likely to go lower next year. So I'll bear that in mind. Now, over across the pond, what's going on? Well, I mean, the Federal Reserve right now is really driving the market. So the Federal Reserve, they're trying to get inflation under control in America. That's creating a stronger dollar, and that's just having consequences everywhere. You know, lowering the pound, lowering, making oil expensive, obviously lowering risk investments in risk assets, etc., in growth companies. So obviously everybody's looking to the Fed, and we're getting to that point now with the Fed where people are just in their head looking like, listen, the Fed is increasing rates, stocks are going lower, potentially going into a recession because people are going to start. We're seeing some economic data coming out saying people, jobs are starting to lower, and that's obviously what the Fed cares about, the economy. at some point they're gonna say, you know what, we've done enough, and let's at least wait and see. And that's why we keep having these, bear market, what do they call them, bear market rallies. We keep seeing it, and then the Dow climbs 700 points on a Friday. You're seeing these things because people are anticipating that the Federal Reserve has to stop. I mean, me personally, I wouldn't anticipate that. You know, again, this is my opinion. I think in history has shown us, through, if you do your history on the Federal Reserve and how they move, they tend to get everything wrong. If you go back on my videos that I was saying from last year, they were talking about this inflation is transitory, and I said that they don't know what they're doing. And I actually got a message from somebody saying, "Oh, these people are so clever." But just because they're so clever, don't mean that's no. You can't think that these people are so clever. Yes, they're clever. They got the job. We've seen Liz Truss. She must be clever. I don't know I don't know where she studied. She probably went to Oxford. She must be so clever. But this clever person that's so clever decided that her best idea would be to cut taxes for the rich people, and look how that ended up for her. So let's not just assume that these people in power are that clever and that better than the average person. Yes, obviously they have a level of intelligence, and yes, it's a hard job, but we can't assume that. And I mean, history has shown us that the Federal Reserve tends to never get things right. So, I mean, me personally, I think they're going to cause a hard recession. I think they're going to, and whether they want to do that or not is maybe they are clever and that's their ultimate aim. But inflation is at 10% right now. It's not really going down as rapidly. Obviously, the effect of inflation you don't feel. The Fed is forward looking, so you don't feel it. What they're doing today is aimed more for the next 2 years. I know. I personally don't think they're gonna pivot just yet. I think they're gonna keep going until they start seeing some hard data saying, "Yo, things is the job, especially the job market." And at the moment, they're not seeing that, so they're just gonna keep going. Um, so, and on that basis, growth stocks, Bitcoin, all these assets that people was investing in when the pandemic hit and it was just spreading all this money. I feel like they're gonna suffer, but we're gonna get these bear market rallies. We're gonna get these ups and downs. And if you're somebody that wants to average in, that's the strategy I'm using. Averaging in, aiming for hold to 5 to 10 years. Cool. If you're somebody that just wants to get in on that big rally and is more of a trader type to just get in now and then ride it out for a little bit on any signs of a Fed pivot, cool. If you're somebody that's thinking, you know what, this is the bottom and I'm going to just go all in now, I mean, that's where I wouldn't agree with you. But, you have to own your strategy and see it through because everybody's going to tell you a lot of things, especially commentators, YouTube. You go and see in BC, they're always telling you, oh, this is the bottom. Then the next week it's like, oh no, hard recession. You know, people say, oh, average in, and then it's like, oh no, 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 buy the dip. What else now? The thing we're hearing now is everybody hold cash, but before we was all hearing that cash is bad and it's just going to erode with inflation. So everybody's got their own agenda. So it's really for you to be comfortable with how you're investing, how your strategy is, because that's the only way you're going to survive. Me personally, I don't think we're going to be in this. If in the next 5 to 10 years, I'm still talking about stocks at all-time lows, then wow, I'll be very stunned. But things come in cycles. We're flushing out the weak hands, and this is the cycle we're in. And I feel like if you find good companies, not these hype companies, the good companies that tend to generate revenue, even if they are growth companies that potentially can be the future, and you're averaging every monthly, so you're not really seeing the effects, then I feel like in a few years' time, when we pass this and inflation is under control, and um, central banks and governments start thinking about growth again, that's when you're going to be in a great position. So yeah, that's the strategy. But let's talk about earnings. Another point of view is, I agree. Another point of view is, and Tesla, we're starting seeing earnings again, and obviously a lot of these companies are reporting earnings now and forward-looking guidance, and obviously here Tesla, I can't. The article's gone now, but Tesla, you could Google it if you want. Tesla reported, they dropped after earnings because they said about unease about they're not going to meet their growth rates and such like that. Obviously, Tesla is like the for me, Tesla is the poster child for the growth stock, the poster child for that pandemic boom in people investing. Literally, you know, everybody was getting into Tesla, and it went up 10 times. And the people made a lot of money in Tesla. I invested probably not as much as I should have, knowing what I know, but everybody was just looking at electric vehicles, those are the futures. And I'm not saying they're not the future, but the way Tesla grew within literally 1 year was like priced like a 10-year growth. And now we're starting to see that the numbers are not adding up. Obviously, people cost of living is high. People, yes, it's good to have a Tesla. You save on petrol, but do you have that 50 to 60,000 outlay? Or obviously, you're not going to spend that much money in one lump sum. Even if you do hire purchase or loans or whatever they call them, those interest rates are going up now. So the monthly payments, and now you've got your mortgage monthly payments going up. So if you've got a mortgage now and your mortgage payment has gone up, is your priority now to now add on a brand new Tesla and increase, add another £400-500 a month in costs? Probably not. So, we're gonna see these, and Tesla is the poster child. We're gonna see a lot of these. Me personally, I feel we're gonna see a lot of these growth tech companies still coming down, and they know, and like I said, interest rates going up. Fed is probably going to cause a recession. So I don't think this is the bottom. Me personally, and wouldn't say it's a poster child. Obviously, because Snapchat has been around before, but growth stock, Snapchat tech company, growth company, they've just plainly said, listen, we ain't making no. We expect zero growth. How do you say you expect zero growth? And it literally fell like, what was it in a day? How much was it? 28%. Look at this company, Snapchat. And I actually use Snapchat, and I don't know. I actually think it's a good company, to be honest. But I'm definitely gonna probably average in. Maybe it'll go to zero. But I actually think Snapchat's a good company. I'm not sure about takeover, if it'll get taken over by a bigger company. We're seeing what's happening with Elon Musk and Twitter. He got in such a high price, and he's basically looks like I'm not sure he's going to be forced to take that deal. But Snapchat is still at such a lot. Is a prime for a takeover potentially, and that alone could increase the stock price. And I think sometimes as well, you're going to have to, as an investor now, you're going to have to look. Yes, these companies are low, but also look at them in a sense that they're so low that you could have an Elton Musk come in. You could have a private equity company come in. You know what I mean. You could have an Instagram, uh, I don't know, the TikTok, whoever owns TikTok is a private company at the moment. They might come in and say, well, let's take out our rival at such a low price now. Let's buy them, and that's gonna double the value at least anyway. So these are the things you need to be looking into. Like, okay, you're looking at it's falling off, and that's why I said it's not good. Me personally, I say it's not good to invest a lump sum at this point because I feel like we have a lot of way to go. But if you're just averaging in, you'll be in a good position. And yeah, we're seeing earnings are coming out. I think Google or Alphabet, Amazon, Meta, they're going to be reporting next week. They're the big tech companies that actually have revenues. So if they start reporting low revenues, then that's again going to be a very bad sign for the market, especially with everything that's going on. And like I said, I don't think we're at a bottom yet, but we're at a good point where if you wanted to dip your toes in, I would. That's it's you can't really go wrong, in my opinion, unless we're still in this position in 5 to 10 years, or obviously Vladimir Putin decides to start a nuclear war. Then well, all bets are off after that. But yeah, earnings are coming out again, so keep an eye on earnings and how these tech companies are reacting, and let's see if that affects the Fed. Maybe the Fed will start seeing earnings falling and pivot. At the moment, they're looking at macroeconomic factors as opposed to company-specific factors. And when I mean macroeconomic, I'm talking about, like I said, employment, um, growth figures, things like that. They're not looking at companies' revenues, but you know, these guys at the federal policy, they own shares in all these companies anyway. So once they start hurting, maybe they'll pivot as well. So keep an eye on that. So what's going on in crypto? Nothing. Nothing is going on in crypto. And is that interpreted as a good or a bad thing? Hmm. I mean, one thing crypto is known for is volatility. Bitcoin, for example, we just talk about Bitcoin is meant to be one of the supposed use cases, and probably the only use case now. We had all this talk about payments and transactions and all this stuff, but really and truly, I don't think Bitcoin is ever going to be used for that. But one use case probably the only use case realistically is a store of value, is a digital gold. But how can you have a digital gold if one day it goes up, you're at 20,000 and the next day you're looking and it's gone down to 10,000 and you're thinking, well, I've just lost half my money. This is not a store of value. This is not safe. Because if you put your money in a bank, yeah, they're going to get shit. Well, you might get better interest rates now, but at least you know your money's safe and it's just going to be steady, steady, steady. But in Bitcoin now, we're actually seeing it being low volatility. Now, is that low volatility because nobody's buying, nobody's selling? Is that low volatility because it's actually maturing as an asset class, as a store of value? I mean, personally, I don't know. Um, I do think it's a good thing, and I do think it does show that Bitcoin is going to be here for the long term. Are we at a bottom? October is normally, the month where cryptos boom, and it hasn't. November, December, generally the month where, I don't know if it's because people that buy cryptos, the retail people, they're spending for Christmas, is generally the months where cryptos tank. So personally, like I said again, would I be dumping a large lump sum in Bitcoin? Probably not at this time. Would I be averaging in? Why not? If you're somebody that actually believes in Bitcoin could be a store of value, you believe in the limited supply story, you believe that it could go up to 100,000 again one day, within the 5 or 10 years or whatever, and you've got that time frame to work with, you're still looking at a very good return. So yeah, nothing's really going on in the crypto market, and you just have to interpret it. I think it's a good sign, and it's interesting how Bitcoin is staying stable where stocks are still plunging. We need to start eventually seeing some kind of divergence between Bitcoin and stocks. Otherwise, your portfolio is basically correlated, as in when one goes up, the other goes up. So hopefully we're getting to that. We're going to get to that point, whether now or in a few years, where if stocks crash, Bitcoin might be high, or vice versa, because that's really going to now differentiate cryptos. Because at the moment they basically just move like growth stocks. They move like these tech stocks, and for somebody that has exposure to them in your portfolio, then it's just like you've got basically if everything goes, it's basically everything's going in the same direction. That's not something we want. In terms of so in terms of one crypto that did come out was this company called Aptos. I don't know too much about it. It was meant to it's meant to be a new layer one project. If you know about layer ones, Google between the difference between a layer one and layer two. But layer one is basically, in short, is a main project. Layer two is something that builds off a layer one. So layer one, Bitcoin, Ethereum, Solana, and then layer twos would be, like the Polkadot that, look, say layer twos, Cardano, Algorand. These basically piggyback off the layer one's networks and try to solve issues that a layer one can't solve in terms of, a lot of things on Ethereum transaction speed. So you have a lot of layer twos that work on the Ethereum network trying to improve transaction speed. So this was one of the first layer ones that was widely hyped up. I believe it had a good team behind it, and I mean, you can still see, even though I'm saying Bitcoin is less volatile, and the big coins are like the Ethereums are being less volatile. We're still in that frenzy where Aptos is where it got to 59 and then crashed to under 10. So if you're anybody that's in trying to invest in these new coin and new coin issues, I definitely would not be investing big money right now as soon as they get in, because we're not in that season. That's just obvious. We're not in that season. We're not in that season where people are, in a week you can see cryptos go up by 10x or 20x. That's not right now. We're in the season of understanding what a project is, understanding can it bring value, can it solve a world issue, is it something that has a credible team behind it, it's not just a Ponzi. It's not just, and you never know. You could do all your research and it could be that. But if you can identify those things, credible team, what's it trying to solve? What kind of technology is behind it? Who what real world use could it do? If you could just get those things, if you could get some kind of belief around the crypto and then get it at a good price. Like I'm going to research Aptos. I don't really know too much about it. I'm going to research Aptos, and it's under 10 now. So if I see that, this is actually a good layer one that in a few years could actually be something, then this is a great time to invest in it. But you're only going to hold that conviction if you understand a lot about it. So cool. But yeah, that's my roundup this week. Like, subscribe for continued content. Listen, the markets are what they are. A lot of people are not talking about them, but me, I'm going to stay with that steadfast belief that this is the time to be paying attention. This is the time to be, averaging in. This is the time to look at the things that you believe in the next few years could rebound. And you know, even if you've got that time frame, if you haven't got that time frame, then you just haven't got it. But and anything can happen in life. So this is the time to be getting our knowledge up now that all the weak hands are seemingly coming out of the market. And again, they have to come back one day anyway to get back to all time high, and that's going to be an issue in itself. But definitely going to keep up with the content. So yeah, like and subscribe. The Money Effect. Peace.